Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are. And this is Tuesday, the 30th of August, 2011, about 2:50 in the afternoon Central Daylight Time. Gold-silver ratio today, both markets up about $5,000 apiece, so ratio hasn't changed very much. You're getting a big rally out of both metals. The Fed came in today in terms of Fed President Evans and just gave the market another jolt by saying he believes in the accommodative easing, that there's more of it to come. We saw the Fed notes. We got today to see just how divided the Fed is. I don't think they'll be that divided the next time around. In all fairness, what is good? There isn't a thing good. You can't tell me that unemployment looks good. It doesn't come down. I think we'll be lucky to see it under 8.5% in 6 months to a year, if it can come down to that number, assuming people don't leave the labor force. Case-Shiller index stunk today. If you're looking at Europe, you can see why the gold market is jumping. All right, what's going to happen in the EU zone? It looks to me like the party's over. It's beginning to look like Chancellor Merkel is going to have her hands full with the German parliament. I think that you're starting to see the groundswell where people just don't want to do more for Greece. And if that becomes the case, then what happens in the EU? So the metal markets are getting a big bounce out of this, and people are moving into the bonds and the notes in America just as a means of protection. As I understand it today, Larry Kudlow is going to have on Bill Gross tonight, I believe at 6 p.m. Central Time, and Bill will be talking about his decision several months ago when he got out of the U.S. Treasuries and why he's viewing that as a different way. It's not that he was right or wrong. That isn't about it. This is a man that runs one of the biggest bond funds in the world. That's what it's about, and he's telling you that now he's shifting to the bull side in these markets. Why? I think you want to see that. I haven't seen the show either, so we'll be watching it together. Here is the gold market, and I'm aggravated. I didn't want to see today's high take out yesterday's high. I didn't want Monday's high taken out. Could have given me a chart pattern that I wanted, and I didn't get it. Right now the market is stuck, and you can see it between, let's call it 1915, 1705, right in that general area. When I blow the chart out, you get to see it. And when I put the swing line study on it, you get to see that this low was lower than that low. Clearly this high is higher than that high. So you've got a rising, an expanding wedge actual in the market. And we're trading about halfway in between that, which makes this the middle of no man's land. It's a very, very difficult market to get involved in. If you buy here, you got to put a stop, as I see it at least, under 1705. That's a $130 risk. If you buy here, your objective is to get up another 70 points to the all-time high. So you've got a $70 profit potential, but a $130 risk. And I know that you're bullish the gold market, so it's very, very hard. In looking at where the market's been trying to gather support on pullbacks, to me it's very clear that it's the 18-day average of closes. Yes, the market slipped under it back here, but it also didn't close under it. And even if it had, so you got a day under it, big deal. The market has been able to throw itself away from that. So right now, it's a difficult, difficult market. Risk-reward ratios are out the door. It's not the ideal spot that I can see, and it's a hard market not to want to be into, but it's the way it is. Your 45 and your 100-day averages are well underneath the marketplace. The Bollinger Band is saying, come on up, boys. I'm waiting for you with resistance at 1895. Support is around 1783. And these aren't normal moves. I mean, you're getting $50 a day moves, even on a mini contract. That's big. So on a full size, you're dealing with $5,000. On a 33-ounce, $1,500. And on the small 10-ounce contract, it's still $500 a day. So these are big moves in the metal markets. And as you can see, they're moves that are taking place within something that happened within a 3-day period from 1917 to 1705.40. So you can't deny that the risk isn't there. In terms, is the market overbought or oversold? It's neither. It's in flatland, which is nice. I was just hoping you didn't make that higher high. Now I'd have to wait for some type of pullback and then make new decisions. But I can tell you in terms of timing, even tomorrow, there's nothing that could happen that would make the way I teach charting for somebody to get into the market up here if they're not in already. There's just nothing that I see there. Silver's a stronger chart. Silver's a whole different ball game. To me, it appears that the silver, if it stays like this, over today's highs will be where some traders buy in. They'll be risking between today's high and low. That's how I'm going to view tomorrow's action, and looking for the market to lift up to the 4,300 zone. Again, this is a stronger chart. It has a pattern of higher lows. It's got the lower high right here, and if you can keep the inside trading day and not explode later today, you could set off and begin the pattern of breaking through today's high, making a higher high, this low, and then this would be the low. You'd have higher lows. So this could be the low, higher than that one, make a new high over that high, and you could be on your way to 43.17. You're certainly not overbought. The copper market's knocking on the door of what number? I mean, I could have told you that this is what I expected a while back. Look at the Bollinger Band. Look how it's falling in. It got way too wide on this big break that we had at the beginning of August when another mini crash, if you can think back that far in the stock market and commodity market, was happening. Now the market has been in its uptrend, higher highs, higher lows, and today you finally got up to the point where you're running into the resistance wall at the Bollinger Band, and that's fine. Now the market maybe narrows in a little bit and we get back to more normal type trading as we leave the summer. That's what I'm hoping to see. In the crude oil, just higher highs, higher lows, bullish. Forget the name of the chart. Higher highs, higher lows. Over the 18-day average, I'm targeting 89.95, and yes, you are overbought. And yes, just like copper, when you had this big break, the stochastic is coming in, and I think it's going to give us a bit more normal pattern. This is the Brent crude. Let's go back. Here is the market. Pick a day. It really doesn't matter. This last Thursday. And the market at this point, in fact, let's go to Monday. You had to take out 1174 at this point. Hadn't done it. 111 was the high. In order to get a pattern where you get away from the lower low and at this point lower high. You do it the next day. So now until you take out 105.06, you have a pattern of a higher high. In fact, you can see that clear on the very next day, right through there. Got it? I'm going to just keep going until you can see it clear. And 106. All right, you're overbought, so let's assume this is yesterday, by the way. You've got that pattern. Fine. So you've got a pattern that I like to call widening out again in a wedge. I'm going to look for the 113.18 level to be the resistance point. You get up to it today. So you're at your Bollinger top. Soupy dory. So where are you buying in it here? You're going to keep a stop at 105.06? That's $10,000 away. That becomes the dilemma in today's market. Rebob gasoline, same pattern. The market went from breaking down. It was in a downtrend here once across 277.17. It hasn't looked back, and this market is starting to lock in its embedded stochastic. I get the feeling, and I've shown this before on my when I went to the financial markets, if you look at the Dow and the crude oil, tell me which one you're trading. You might want to look at that tape. I played one over the other. And if you cover the name, you don't know which one is which. They are trading lockstep, and now they're starting to pull the energy products, as I see it, right with them. In the note market, here's the notes sitting up on the day at very nicely, 19-point gain. Why not go back for these highs? I don't see why not. If you take out 128.15 or so, well, I'd get a little different opinion on it. But until that occurs, all that's happened is the market's fallen back to the 18-day average of closes, and it's looking pretty good. The hardest problem with being short these markets, and the 10 years a market that you could consider, the 5 years the hard one, and you go shorter, it's even worse, is you know where the Fed is. You get a big break, the Fed's stepping in, and they're going to continue to be buying this market to stimulate the economy. So in my opinion, I think you're best off always waiting for the buy signal in this environment than you are trying to be a wise guy and picking tops in them. When the top comes, we'll see it. But you need to get past the point where the big boy out there, be it the Fed, be it one of their proxies, as I like to call it, is there and buying in all these auctions. You can get yourself into too much trouble. Here's the gold-silver ratio. And even with today's big gains, all you're doing is going sideways here, not a real big change one way or the other. So I guess we wait. We'll see how the markets want to finish the day up. We're getting nice rallies, little profit taking apparently going to come in on the close here. Okay, markets don't go one-sided forever. If you'd like